Coming up on Over a Barrel, gas prices during the springtime normally rise? Well, we haven't seen it yet, but are we starting to see it right now? Patrick's got those details coming up on Over a Barrel right now. Thanks for joining us on this latest edition of Over a Barrel. I'm Matt McLean. That's Patrick DeHaan on the other side of your screen. If you're listening to us, well, he hasn't spoken yet, but he's here, I promise.
I am here.
Very good day to you. Let's go ahead and get right into it, Patrick. We've got gas prices that have been playing weirdly this past spring or this spring as we are moving into literally we are recording this on the first day of spring, and it almost seems like gas prices are like, nah, it's still winter, we're not going to mess with the price increase yet. And now this first day of spring, are we starting to see gas prices rise with the temperatures?
Yeah, Matt, spring is starting to show up at the pump. That is, gas prices are springing up. It had been a 4-week decline. It had been unusual. I'd been talking to the media and saying this is fairly unusual, and it's a sign of economic duress. The stock market has been declining. Oil prices have remained under $70 a barrel, but gas prices really hadn't done their spring dance yet. Until now, and we are now starting to see that. Areas of the Midwest, the Great Lakes, Indiana leading increases. Indiana up 21 cents in the last week. Wisconsin up 17 cents. Michigan 16 cents. Iowa 15 cents. Illinois 12 cents. So, Matt, as I look at the biggest movers or the changes over the last week, I only see about 10 states, maybe 15 states that have seen prices decline. That's going to leave 35 states that have seen prices go up. And yes, all of it has to do with generally the changeover to summer gasoline, which is now really kicked in.
Yeah, a lot of things to unpack there for just a few moments. Now, why are we seeing things in duress when it comes to gas prices? You're saying that's a symptom of things within the economy not looking so great. At the beginning of this year, we were actually looking fairly good, just not 90 days ago when it comes to the economy. Was it, the roaring whatever? No, not quite, but we certainly weren't looking at anything that showed duress. So what are we attributing this to?
Well, Matt, the Fed said it beautifully yesterday. The Federal Reserve decided to keep interest rates steady. The headlines, if you're following along, oil steady. The Federal Reserve sees heightened economic uncertainty. It's that exact uncertainty that was leading to gas prices declining. And a lot of that had to do with the potential for tariffs, rather. So, when you induce a lot of uncertainty, the stock market doesn't really like so many changes all happening at the same time. Keep in mind, tariffs are still potential for April 2. They're just paused. And so the Federal Reserve citing economic uncertainty, that's the economic uncertainty that basically held gas prices in check for the last couple of weeks, which is unusual. And again, if there is some level of certainty moving forward, we could see gas prices going up a little bit more, because as goes the economy, as go gas prices. A slowdown in the economy would mean a slowdown in gas prices. Whereas if the economy is improving and growing, if there is more certainty, we could see gas prices going up a little bit more. So keep in mind, a lot of the climate for the decline in prices was because of the uncertainty surrounding tariffs and a trade war. But to your point, there's an endless amount of headlines. Canada has a new prime minister. There have been a lot of back and forth. Canada also has to have elections before October. Trump didn't really endorse current Prime Minister Carney, but there's a lot to unpack there, because Canada is a major exporter of oil to the United States. We still have a potential ceasefire deal between Russia and Ukraine. So, again, so many different headlines that could impact oil prices and gasoline prices in different ways. A lot of these levers could potentially offset. But the biggest question here is, we still, as you mentioned, first day of spring, will the tariffs go forward on April 2nd? Will Trump issue a carve-out for oil completely? We spoke on the last podcast about that. That still remains a potential, Matt. So a lot of uncertainty.
Yeah, President Trump not ruling out a recession. He has been on record now, multiple interviews, kind of not saying, yeah, I think a recession is going to happen, but also not flat out denying that it's going to happen as well. I'm trying to figure out a way to ask this without trying to appear on one political side or the other, because we do try to maintain a very careful, unbiased aspect here. But Typically speaking, tariffs are not usually seen by most economists as an economic driver, if you will, or an economic growth pattern, if you will, because it has a direct impact on so much of our world, including, believe it or not, your insurance rates.
Yeah.
Strangely enough, you didn't think about that. Why would a tariff impact an insurance rate? Well, according to the insurance companies, it's because auto body parts and lumber and whatnot, in other words, to repair a home if it's damaged or repair a vehicle if you're in a car accident, well, those that lumber or the auto part comes from maybe Canada or Mexico, and now it's subject to a tariff, and therefore when the insurance covers the damage, they have to pay more for the parts. And guess who's going to end up paying for
absolutely.
that? It's passed on to you and me. So there's a lot of layers that I didn't even think about until the insurance companies are like, hey, you may see your rates go up 5, 10%, 20%, whatever the case may be. And I'm like, wait, what?
Yeah.
There's a lot there.
And look at, the headline is certainly interesting. Again, highlighting the policies, the potential fallout from tariffs, right? We've heard a lot about this. A prominent forecaster was concerned about the overall state of the economy. And again, a lot of this, Matt, as a business owner, when there's a lot of uncertainty, it doesn't give you clarity to grow, to want to add more employees. A lot of businesses have been, downsizing. The government has been downsizing. So that all really weighs on this recession watch. And that's why gas prices have kind of been faltering, because the possibility of an economic slowdown is increasing, not decreasing. If Trump would provide clarity, if maybe there wouldn't be tariffs, we could get a little bit more confidence that the economy is going to head in the right direction. But for now, again, prominent forecaster is concerned, recession watch. There's all these economic indicators. Again, the Fed highlighting yesterday, the business uncertainty is not good. And that is what has led gas prices to be relatively low this spring, is because when you toss a lot of uncertainty into the market, things like oil, well, they react just like the stock market reacts. So while we've enjoyed that, it's also now the time of year that the changeover to summer gasoline is starting to play a bigger role. I also had the calendar. There's been a lot of questions about, the changeover to summer gasoline. For those listening, watching, the biggest difference between winter and summer gasoline as we delve into this is actually that winter gasoline is easier to produce. Generally, it contains more butane, Matt. That butane's a little bit more volatile. And of course, as temperatures warm up, you don't want volatile gasoline. And that's the problem, is that it can evaporate. Essentially, a lot of that butane will evaporate over time, and that contributes to low-level ozone. So when we're talking about switching from winter to summer, winter gasoline has a lot more butane. That butane tends to be cheap. Summer gasoline has more alkylate, which is generally far more expensive, and that's why the cost goes up. But not only the cost, but the complexity. I'll real quick, for those watching on YouTube, try to pull up a calendar. But we've highlighted this in the past, these calendars about how the switch over to summer gasoline happens. Matt, as we pull up this document here, like no shortage of, let's see how many different pages we have here. This is 14 different pages, and look at all the various dates for these transitions, cycles, dates. And so as we look here, this is a lot of the complexity that costs us at the pump, is all these different dates, getting this gasoline to where it needs to go. I mean, pages and pages of these different dates depending on where you are. So, that is really one of the difficult things that ends up costing us money, is not only the fact that winter gasoline has more cheap butane and summer gasoline has more expensive alkylate, but getting all these where they need to go, the correct date, the correct pipeline cycle. It's such a complexity, and that does contribute to the cost that we pay at the pump. And now we've made that transition in most areas. Like I said, the exception, though, New England hasn't seen it, Matt. So if you're taking up a trip up the East Coast, a lot of folks right now, I've seen, $2.99s in New Jersey, New York, Maine, Rhode Island. You're seeing sub $3 prices in areas you haven't seen that in a while. But the fun is going to come to an end. I hate to be a bit of a pessimist here, but once the Northeast makes the change, which will happen right around April 1st, they too are going to see gas prices jump up. So if you're in New England, the fun is about to end. Fill your tank up here in the next week or so.
Since we started this podcast, we're in season 3 right now, and basically the entire time I've talked about business-wise how I do a 30, 60, 90, a 6-month, a year. I throw darts and hope. But the fact of the matter is, even my 30-day, which I typically can steer the company, one direction or another, and my 30 days usually pretty much on target, where I can kind of look ahead for the following 30 days and the next 30 days and say, okay, this is the direction that I want to move it in. I'm noticing that even in that 30-day, I'm having to pivot a little bit, and that's a little abnormal compared to what I normally have to do, just in order to kind of maintain that balance in running a business. That 30-day has usually been fairly stable. The 60, some degree, a little bit stable, and then the 90, I know I'm going to have to probably pivot a little bit here and there. But even the 30-day right now, I mean, it's almost day to day sometimes. Let me ask you a question like this. Do you foresee a potential possibility, because in the springtime prices normally go up, do you see any indicator that the economy possibly going down just a touch in the next couple of months, sort of erasing that typical spring increase, or certainly dampening it down because of the switch over to the reformulated gasoline?
Yeah, absolutely.
Do you think that's a possibility?
Yeah, I do, and in fact, we've already seen that, Matt. I would easily say that, given the economic uncertainty, that normally we see a price increase of 20 to 65 cents between February and the peak, usually, which is in mid-April. This year, it may not be that much. It may only be 15 to 25 cents instead of 20 to 65 cents. To your point, to offset some of that uncertainty, because the market does not like the uncertainty. And oil prices have not really rallied. Gasoline prices haven't really rallied as much as they do. So, yeah, I would definitely think that there's going to be an impact, and it's going to limit the amount of increase that we tend to see. Absolutely. Now,
this is a very different initial start to the second President Trump term versus his first term from 2016 through 2020. I won't play all the sound bites, but in the comments during his rallies, you'll be tired of winning, all of these types of things. This is a very different start to his second term than the first term. And arguably speaking, the economy was not in a recession in the outgoing administration. Again, maybe it wasn't in the roaring whatever, but it seemed to be holding its own at this point. You would almost ask, pardoning the pun here, why didn't he pour some gasoline on the economy that he inherited from the previous administration, and really send it into a next level? There's a lot there, and I suppose it's tough to answer those questions from an analyst perspective. But it is certainly definitely having an impact on everything. Prices, the economy overall.
It's just difficult to keep up with the pace of changes, right? It seems like we've already had potentially a year worth of policy shifts, and
in a matter of days.
It's been 8 weeks. And so when you, to your point, right, the Trump administration has been rapid fire. And it's destabilizing, in my opinion. That rapid fire move is giving, to your point, what you mentioned about your own business. It's a lot of uncertainty when things are happening that are so hard to keep up. I mean, some companies don't know even the full impact of tariffs. Start, stop. I mean, that's where it's been. So, to your point, the first Trump administration, for those that have seen the graphic, looking at the stock market, it was a very gradual climb under the first administration. And now, because of the rapid fire policy shifts, the stock market's reacting. It doesn't like a lot of turmoil, right? People, the stock market don't like a lot of uncertainty. They don't like a lot of rapid change. So this is something that has really limited, I think, gas prices right now, because they're oil, commodities, the stock market, they're all navigating this level of change and uncertainty. And it's so rapid fire, it's hard to keep up with. So yeah, I definitely think the second administration is the second term of Trump definitely is much different than the first term. There's a lot of potential good that Trump is, trying to deregulate, trying to make it easier for businesses to grow. But at the same time, he's introducing a lot of uncertainty. And that's, I don't know that that's terrific, but a lot in his administration are not mentioning the stock market. They're saying, well, this is a transition period. You know, the stock market was very important to President Trump in his first term. You remember how many
Oh
times
yeah.
he said the stock market's great, look what I've done. But his second term, he's really shying away from saying things like that, and so are many in
In
his.
fact, he says, don't even look at the short term, and brings up examples. He goes, China looks at the 100-year outcome for any of their decisions, and here we're looking quarter to quarter, and he feels that that's the wrong methodology. It's
Yeah.
actually been an about face. In some
Yeah, absolutely. It's been a massive turnaround. You know, to go from look at what I've done to don't look at the stock market is it's a very profound difference, and the impacts are definite. You open your 401k, you go to the gas pump, and prices are a little bit lower, and a lot of it is because of uncertainty. It's not, and some of the articles I've spoken to reporters is you have to take it with a grain of salt. We all love cheap gas, right? We all love $1.99 gas, but we don't want it associated with a pandemic. We don't want it associated with a massive recession, because guess what? You can't even enjoy the low prices then, and that's the risk, right? That is the risk right now. However, if Trump decides to take a different stance, if tariffs, say he wakes up on April 2nd and he's gotten everything out of the negotiation that he wants, there's still time for the economy to get back on the rails, right? But for now, it's kind of been lost on the rails. Stock market has lost several thousand points, so there's still time though.
Several thousand points equaling a whole lot of money, no question whatsoever.
Yeah.
I think we've seen some estimates, over $1 trillion or something.
Yeah, several trillion dollars.
Several $trillion. So yeah, I mean that is exactly to the point. Are you seeing in in an analyst, are you seeing any comments from anyone within the administration or anyone that you have talked to as a justification for why we're seeing what we are seeing? These types of things, moving back and forth. Is there a justification, a rhyme behind the reason, so to speak? What is it that you're hearing or being told?
Well, the White House itself, the communication staff in the White House have been just saying this is a transitory period, right? That the stock market is gyrating because Trump is doing a lot of changes. I would argue, though, if those changes were good, the stock market would be going up. So there hasn't been to me a direct response to why the stock market is sinking. I think the Commerce Secretary Lutnick had said essentially the same thing. They're not directly answering the question. They're simply saying, well, this is what happens when you go from policies from the previous administration to the Trump administration. So, I don't really know what else to say. This is Trump's agenda, and nobody's really owning it like they did the first time. And Trump has been on this wild goose chase of putting tariffs on everyone. And I don't know that this is going to be a terrific business environment if this is the way it sticks. And gas prices are a little bit like the canary in the coal mine, right? When oil prices go down, and by the way, the other thing is drill, baby, drill. Oil companies are saying that's dead. Harold Hamm, who's a pioneer when it comes to the oil industry, he said, look, we're not going to drill more. In fact, we'll probably be drilling less unless oil prices hit $80 a barrel. The oil industry is saying we're not going to do it
because they can't make a price. They'll lose money.
It's economics.
Yeah. No business is going to say, yes, let me pay for something, and oh, by the way, not make any money off of it, or even worse, go into the red and lose money over it. I mean, that's no business who is for profit can think like that and still survive.
Yeah, exactly right. And that's why oil prices have been faltering. U.S. oil production will eventually start to go down if oil prices lose value, because why work for free, essentially?
Right.
And where that dictates, where we can end up on the podcast here as we get closer to wrapping up, is that for now, gas prices are in a little bit of a limbo. There's still a little bit of the seasonality that's happening to gas prices, but there's a big cloud of uncertainty. And if things improve, if there's more certainty down the road, gas prices could go up because it could be good for the economy. It would mean more consumption, more certainty, more, people will react when they know they're going to have a job or they're going to have this income, they'll go spend it. And I'll mention diesel as well. Diesel is a bit of the opposite. Diesel prices tend to decline as temperatures warm up because heating oil and diesel are the same thing, and heating oil consumption is starting to go down. So diesel price I would expect to moderate here. in the coming weeks. The other real wild card is refinery maintenance season. We are still in the midst of refineries doing their seasonal turnarounds, kind of like, taking your car in for an oil change before a big road trip. So, for now, a little bit of uncertainty is leading to relatively lower prices, but the spring transition, which has really kicked into high gear this week, is going to likely lead to the national average going up for maybe a week or two. Beyond that, a little bit difficult to forecast. So we'll leave it there.
Yeah, well, I definitely heard a ding in my earpiece saying, and I know what that ding means. It means you've got another interview that you've got to hop into, and I recognize that. Patrick, thanks so much for this edition of Over a Barrel. I will say that I have seen some what I think is price cycling. That's your expertise, not mine. But I'm seeing even prices here, 243, and then hours later 279, 281.
And there's
just a couple of hours later, and it seems to be cycling even here, and a heck of a cycle.
Yeah, and to your point, we did see a cycle across most of the Great Lakes this week. The cycle was routine, but the increase, the amount of the jump was enhanced by that switch over to summer gasoline. So I'm glad you said that, because a lot of areas, the Great Lakes, the Midwest, we did see prices cycle. The amount was higher. The difference between the last cycle and this cycle was the change over to summer gasoline. So I'm glad you addressed that.
Understood. All right. Well, Patrick, thanks so much for joining us on this edition of Over a Barrel. He's the other co-host, by the way. He didn't join us. He's just here. So there is that aspect as well. That is going to wrap up this edition of Over a Barrel. He's Patrick. I'm Matt. Thanks for joining us. We'll talk again coming up really soon.
So long.